Welcome back, traders. We are looking at the S&P 500 futures. Today is Saturday, July 14th, 2018, and we are at 2804, right at resistance, prior resistance. Just 1 or 2 weeks ago, we were way down here, and it was actually looking a little bit bearish, and I had mistakenly went bearish. So I want to look back at what mistakes I made here and why I turned bullish, and what could I have done differently back then, and also making sense of this rally. It's very possible that once we had this rally here, we pulled back and all that stuff, but we didn't do that. And there are some hints that we can see that the market would move in this direction on a more micro scale. So I'm going to look at some micro counts here and make sense of what happened. In terms of news, basically during this time period, July 2nd, 3rd, and 4th, we had a lot of trade wars. So a lot of the news was about trade wars, and this, I think it was like a $250 billion, let's see, I think it was like $250 billion $250 in tariffs on products from China. And so you would imagine that when there's so many tariffs that are kind of going back and forth, that would tax a lot of products, and it would make the markets uncertain. And technically at that time, it actually looked like it was potentially gonna fall off the cliff. Basically going into a July 4th holiday weekend, which is right here. Usually the market rallies or just stays still, but instead it was just dropping off a cliff right here. And the thing is, at this time, it had formed an ABC, on the lower side 2700, on the upper side 2740, an ABC, and it had already made its initial kind of movement in that direction. In the event that we broke 2705, 2700, then this would have formed an ABC wave 2, and that would have been a wave 3 down. But the action, basically into that July 4 weekend, actually wasn't. I don't think it was a weekend. It was actually during the weekday, Wednesday into Thursday. It actually pulled back and went the opposite way, and that's the time when I should have actually seen this sign here. Like, it almost seemed like, okay, well, it didn't fall down here, but maybe this was it. But then it pulled back up and made another high, and then eventually broke this high with the announcement. Right here we had the announcement of with the implementation on that Friday at midnight, 12:01, of the tariffs. So you would imagine, okay, we're gonna actually implement the 200 whatever billion dollars in tariffs on midnight, and you would imagine the market would not like that. But the market popped up, right? So they popped up, pulled back, and then we shot up. So the thing is, from a learning perspective, since this particular call of it going down was wrong, what could I have seen? What could I learn for next time? Right? So, and it pulls back down here, and the follow through. The thing is, it has to follow through past 2705, 2700. If that does not happen, which was a key requirement, then if something like this happened, well, what is this? Well, the thing is, the other alternative pattern is that this is an A, B, right? And then we have a 1, 2, 3, 4, 5, right? 1, 2, 3, 4, 5, and then this would be a wave 2. And usually what happens, you have a 1, 2, what follows next? It's a wave 3, right? But the wave 3 doesn't happen immediately. What happens first is you have an A, B, and then the 3 starts, right? So the thing is, next time I got to keep in mind, in order for this wave 2 flap to pull, formation to the downside to actually, work, there must be no AB, right? It has to go straight down. If it doesn't go straight down, that pattern is invalid, right? So that AB was the first sign that wouldn't happen, right? And then the second sign that it wouldn't happen is this kind of movement, right? This kind of movement, even though it's not like extremely bullish, it's it's not following that pattern that I specifically expected to play out. So at this time, if you were to um, yeah, if you were to have gotten short here, this would be a time that that should be covering, right? And the thing is, the next morning, especially with the news coming out saying that the tariffs are going to come out, it pops up into resistance. So at this point, you're thinking, well, okay, maybe it just hit resistance and it'll pull back all the way down. But it pulls back down and it doesn't follow through, right? But the thing is, by then, the fact that this even happens, it should not have him in the first place. So even though it pulls back down, this is not where you would, enter a short, because the pattern, even though this is resistance, you want to short a resistance. You don't want to do it in this case because the ABC pattern to the downside did not follow through, right? So when it did not follow through, and you have this AB, and then you have a potential, whatever this is, 1, 2, 3, 4, 5, and then a wave 2, then you have this potential wave 3 that pops up. So that's the lesson that I learned from here. Obviously, I turned bullish, and I basically had to cover, and when bullish with Dow calls, also bought the UPRO once this breakout happens around 27.57. And so those were, those became profitable. But I do want to point out that this mistake, the way to avoid it is to make sure that when the pattern doesn't play out exactly, then you got to get out, right? So this stuff here is the clue that the downside follow through did not happen, and so the right thing to do at that time is to so you would think the market is going to react negatively to this horrible news, and in fact, I thought all along, all the North Korea nuclear denuclearization talks, and all that would be bad for the markets. But every time it happened, what happened afterwards? The market went up, right? So I thought, well, maybe this time it's a little bit different because these are actually companies that have products that are going to be more expensive, and therefore it's going to hurt people on both sides. But hey, it looks like the market reacted differently. The market reacted in that they're going to think that the U.S. is going to win the trade wars. So this action reflects that, right? So the thing is, you always have to have an open mind about where you could be wrong, right? So when could I have had that open mind? Well, if you're expecting downside here, and then all of July 4 into July 5, downside doesn't happen, and we still didn't break that 2710 level, and that's your clue that the downside is not going to happen, right? If anything, we could consolidate. And the risk is when there's an event like Friday, July 6th, happening with the implementation of hundreds of billions of dollars in tariffs, then you got to keep an open mind that, hey, maybe the market's going to react differently than what than what you're expecting. And so, and the first clues of that was when the market opens on Friday, and basically rallied, broke that resistance, and headed into this 2760 by the close. So by the close, you should have turned long, right? So any position that turned long would have been profitable by the end of this past week, right? So I'm gonna in this next video, I'm gonna detail out how you could have expected, what was happening this past week, because I think what happened this past week makes a lot more sense, and so we're gonna look into a micro count in this area. So that's basically my lesson from the previous week. This week we were profitable, and so I want to also want to take a look at what we could have learned from this pattern right here.